Hello, this is Boostalk YouTube channel. Today, we are gonna talk about Coca-Cola's income statement. Coca-Cola is the most famous company in the world. So, I think many investors like to figure out Coca-Cola's value on stock market. First, let's take a look at Coca-Cola's revenue performance. As the graph clearly indicates, Coca-Cola has maintained a consistent upward growth trend over the past 3 years. Now, I want to emphasize the significance of that 2025 figure. Surpassing the $47.9 billion mark in the midst of global economic volatility is surprising. It is a powerful testament to Coca-Cola's brand power and pricing power. Now, let's take a look at our gross profit, which tells a slightly different story, one of challenges in defending our profitability. While our overall revenue has been climbing, our gross profit has unfortunately shown a downward trend. This indicates that despite selling more, our cost of goods sold (COGS) has outpaced our revenue growth. This is largely due to the rising costs of raw materials such as sugar and aluminum combined with increased logistics expenses. Let's analyze our operating income, which shows a very successful rebound through operational efficiency. As you can see from the trend, we faced a significant dip in 2024. With figures moving from $13.7 billion in 2023 down to $9.9 billion. However, Coca-Cola reported a strong recovery in 2025, bringing us back up to $11.3 billion. The decline we saw in 2024 was likely due to one-time non-recurring expenses or a strategic expansion in marketing investments. What's important, though, is how we responded. This 2025 recovery is a direct result of our operational optimization and rigorous SG&A selling, general, and administrative expense management. Let's look at our pre-tax income, which is perhaps the most striking part of today's report. It highlights a significant strengthening of our overall financial health. The most remarkable detail here is that in 2025, our pre-tax income of $15.9 billion actually far exceeded our operating income of $11.3 billion. What does this tell us? It suggests that our non-operating activities such as interest income, gains from asset sales, or equity method earnings have made a substantial contribution to our bottom line. However, I think this surprising figure in 2025 is not important for us. Because I think that non-operating income is kind of lucky point. So, if we want to analyze what this company is, we should focus on its operating income. Let's start by looking at our revenue growth YoY. Now, if you look at the numbers, you'll notice a clear trend of slowing growth over the last 3 years. Now, what does this tell us? While the percentage is dipping, this is actually a classic characteristic of a massive, mature corporation like Coca-Cola. It indicates that our era of explosive market expansion is shifting toward a more stable maintenance phase. Next, let's look at a much more encouraging set of numbers: our gross margin. This is where we see the true strength of our profit structure. As you can see, the trend is moving steadily upward. Now, what's particularly impressive here is the contrast. While our revenue growth has slowed down, our gross margin is actually improving every single year. For a manufacturing-based company, maintaining a margin above 60% is nothing short of extraordinary. It serves as clear evidence that despite the rising costs of raw materials and global inflationary pressures, Coca-Cola is successfully defending our margins. This is made possible through our efficient supply chain management and, more importantly, formidable brand power. Moving on to our operating margin, which tells a very compelling story of resilience and recovery. Looking at the timeline, Coca-Cola encountered a slight dip to 21.23% in 2024. However, the real headline here is performance in 2025, where this company achieved a sharp rebound to 28.71%. To put that into perspective for everyone, this means for every $100 in sales, we kept nearly $29 as operating profit. This is a figure that far outpaces the industry average. Now, let's take a closer look at our operating efficiency by analyzing the SG&A selling, general, and administrative expenses. First, looking at the absolute dollar amounts, the trend shows a strategic pivot. We moved from $13,972 million in 2023 to $14,582 million in 2024. However, in 2025, we saw this figure dip slightly to $14,521 million. What's impressive here is that despite the global inflationary environment, Coca-Cola managed to reverse the upward trend. This indicates that the company successfully implemented a cost diet, cutting unnecessary expenditures and significantly enhancing operational efficiency. Next, let's examine the SG&A to gross profit ratio. This metric is crucial because it tells us how much of our core profit is being consumed by overhead costs. The ratio held steady at 51% through 2023 and 2024, but it dropped to 49% in 2025. This downward shift is a highly positive signal. A lower ratio means our cost efficiency is improving. These current figures demonstrate that Coca-Cola is managing its operating expenses in an extremely stable and healthy manner relative to its profit growth. Next, let's shift our focus to the company's debt management by examining interest expense and our overall financial stability. Despite the prolonged high interest rate environment, Coca-Cola has successfully defended its bottom line. This stability suggests that the company is either restraining from large-scale new borrowings or is effectively refinancing existing debt to mitigate interest burdens. To get a better sense of our safety margin, we look at the interest expense to operating income ratio. This tells us how comfortably the company can service its debt using its core earnings. The ratio climbed to 0.17 in 2024 as operating income softened, but it took a sharp downward turn to 0.12 in 2025. While interest costs remained flat, our operating income saw a significant rebound in 2025. A ratio of 0.12 means that only 12% of our operating profit is needed to cover all interest payments. This is a very strong indicator of financial health and solvency.